GM. So Bitcoin managed to close the weekly candle above that 100-week EMA that I've been mentioning to you guys over here. So for all of that downside capitulation, the week ended up closing above it, which is a good start to bulls. That's what you wanted to see. And that weekly candle now sets up the range that we're going to be trading in for the coming days and maybe even coming weeks. So that's between 80K and 96K. So we zoom into the daily. What you can see is Friday offered a nice capitulation candle below that 100-week EMA. We then reclaimed it on Sunday and we're now pushing up. So let's analyze this capitulation. So volume wise, did it have a big volume? Yes. You can see the volume on this candle was larger than months and months of recent price action. You have to go back as far as really years. You have to go back as far as March 2024 to find a volume candle that is more than this one, at least on this KuCoin chart over here. So certainly has the hallmarks for a bounce, and I mentioned reclaiming the 100-week EMA is going to be one of those signs for bulls to have control. And look how beautiful this has been. Resistance, 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 flipped it, support, support over here, and now we're pushing up. Exactly what I talked about in the last morning markets video is reclaiming this 100-week EMA and that setting up a move. Or it might have been the weekly outlook video, I can't remember, but it was one of those two. So that's playing out very nicely here. And what do we have ahead? So we have this big IBIT options wall that I've been talking about. Now, IBIT options is obviously expired, but we can see this level still having some respect. So it's going to be a big level to get above because it's where a bunch of open interest was only a few days ago through options, and it catalyzed this dump lower. All of this price action, which got pushed lower into this capitulation, was heavily due to the IBIT OPEX. Puts got in the money and they were incentivized to keep pushing price below it come Friday last week so that they could profit from it when the options expired. So it's going to be an interesting level now on the upside. I think very key to flip that level. As a bull, you want to see price close above here, and that should set up a move to 90K. If we keep holding it as resistance, then you have to look back at the 100-week EMA. That would be expectations, but it seems like price wants to push above and start to head into some of these gaps here, especially the way it's been retesting this 100-week EMA as support, given those beautiful setups. So got the IBIT chart up here. It's already retraced all of Friday's candle, which is a good sign for bulls again. So Monday, so far, been green. Question now is, can we get above Thursday's candle? So Thursday's selling is going to be a big one for bulls to reclaim. I think above there sets up that squeeze, which we can then see come towards that 90K level. And that's going to be this level over here on the IBIT chart, which correlates to that yearly open actually. So 90K is that big interim level in between. Get above here, that's going to correlate with filling in this gap, and then coming to 53 would be on a more violent squeeze if we do get above 90K, because there are some big options level now coming up this week, if you guys see. So come over here, we look at Deribit options. We've got 90K, 85K, and 80K as the big call walls for Deribit, and this expires Friday at 8 a.m. on Friday. So these levels are going to be very key, and it confluences back with what I said earlier. So we've got this weekly range, but within this range, we've now got 85K. So we've got 85K. We've got 90K. And we've got 80K. So where did that go? Let's make that 90,000. And we've got 80,000 as some key levels to keep an eye on. So as you guys know by now, initial expectations would be for these levels to hold. So you would expect 90k to initially reject and lead to mean reversion back down. If you can get above 90k, that can lead to a further squeeze, perhaps to the high of last week's candle, where I'd then look for a rejection instead in that scenario. Or perhaps you reject it initially before then breaking out after. Could see one of those two scenarios. And then if we lose 85, you'd then expect 80k to hold as support. You don't want to see it lost, because then that can lead to a big capitulation lower, because there's a lot of open interest around these levels. So that's what I'd be looking at pathwise. Looking to trade these levels initially as resistance, but if it flips, then we can squeeze higher. But expecting rejection initially, and then it's just a matter of how do we retest the lows. Because I think what's setting up here is longs rather than shorts, because shorts have been playing out for some time now, and eventually that becomes consensus. Everyone starts shorting, and then that's when longs actually become the better play. So what I'm looking for is, do we get some sort of retest of the lows here? So potentially we come up to 90, we find resistance. Maybe it's we bottom at 85. If so, I'll be looking for some sort of long when I see the strength and that we're pushing up. Or maybe we need a deeper retracement and we actually need a sweep of the lows, which offers a much cleaner setup, because then you have a clear invalidation, which you can set at the lows, where I'll then look for, again, a long trade. If I see, especially around that 80k level, anyone with calls at 80k is going to be incentivized to hold this level. And if anyone has puts there and you see price holding it, again, they've got a cover, they've got a hedge to make sure they're not going to get wrecked. And that can set up this path over here where we actually create a bottom around that 80k, especially if it's before Friday 8 a.m., of course, which then gives you that extra confluence to look for some sort of long. So that's what I'm looking at. Of course, the hardest path to trade is always just going to be the V reversal, and it's fine. Guys, as a trader, you don't have to trade everything. You can just leave it. If price is just going to go up like that, which it very much can do, many different ways it can play out, that's fine. You can instead just let the move play out and maybe you short the first rejection. You don't have to catch every micro move on the charts. Catch the moves that align with your systems, and for me, it would be some sort of retest of the lows, whether that's the sweep, as I said, or whether that's the failure to return pattern where you build that higher low. So that's what I'm looking at. And again, that's because I've seen the high volume day. I've seen the ETF outflows be super high here. And we know when there's super high inflows, typically comes around a local top. When there's super high outflows, typically comes around a local bottom. And it's been, of course, confluence with this 100-week EMA. That's the reason I'm looking for longs here. On low time frame, you're already seeing the longs play out on the 100-week EMA on the flip and retest. So can we get something more so on the 4-hour, maybe the daily, as I've showed here, where we lose the 100-week again? And that is one of the setups that I've just showed you. It's the exact same thing. So perhaps it's the actual reclaim of the 100-week EMA that is the trigger to get long in any of those bottoming formation scenarios. So that's what I'm looking at on the long side. I think longs are offering the best risk to reward here. That's going to be the play for me, and that is the Bitcoin update. So looking at the wider market, what are we seeing? Well, again, this is the daily. You've got the yearly open, which seems to be that main target on any rallies and short squeezes, because we've lost that level and cannot reclaim that level at all. It keeps back testing as resistance. So that seems like the target, and that seems like the clear rejection point if we do break 90k. Above there is where you can get a proper squeeze, but until then, yearly opens clearly bearish below it, so you expect it to hold as resistance. Nasdaq is trying to reclaim that September FOMC level. That again leads to chop between a September FOMC and October FOMC, because it's showing that price has no clear reaction to the rate cuts, because you're bearish from the October rate cut, but above the September FOMC, you're bullish from the September rate cut. So it's indecision. Below, biases for lower. Above October FOMC, biases for higher. In between, expect chop. And it has been choppy. It's been a lot of distribution so far, but chop at least until stock market picks a direction. Same with gold between 4K and really all-time high. Chop until it picks a direction below 4K or above the all-time high. And that's, again, because the dollar is above 100. It's accepting above here with 1, 2, 3, and potentially 4 candles here on the daily, which previously it's only had 2. It's had 1. It's had 1 over here. So as you can see, in recent times, it doesn't like being above 100. So the longer you stay above 100, the more likely there is going to be further risk off moves in the market. And we've, of course, seen that affect Bitcoin. We're seeing that, of course, affect your altcoins like Ethereum. But what's Ethereum done? Well, Ethereum has simply filled in the gap that I've been mentioning to you guys. So if we zoom out to the daily, I drew this gap for you all. I said ETH's likely going to fill in all of this if it loses the yearly open. That's exactly what happened. Filled in this gap and now it's bouncing. So ETH's much the same. You've got this high volume day, capitulation into a clear gap over here. It's a place for price to bounce. Now, whether that bounce actually can turn into a rally depends on whether we can start breaking some market structure. So market structure on ETH on the daily is at 3.1k. So you need to start closing above 3.1k for any chance of a higher time frame bottom to actually be forming and some extended rally. Otherwise, again, you're looking at this is a good bounce point. It's still good risk to reward for longs, but maybe it's just going to be like that. Maybe it's just going to be one of those sharp squeezes up that rejects the market structure level. So that's what I'd be looking at. Reclaim the 100-week EMA, reclaim the daily market structure, then yearly opens the target for ETH, where you then look for a rejection there. And of course, if we can't reclaim these levels, then bias is still for lower because we are in a downtrend until you reclaim this market structure level over here, because this is the high that led to the lowest low on Ethereum. So that's your daily trend. And if we look at Bitcoin in the same light, looking at Bitcoin in its daily trend, what have we got? Well, you can see it's stronger than Ethereum because it's above its 100-week EMA, whereas ETH's below it. That's why Bitcoin's more interesting for longs, if you are going to look for longs. But its market structure level is here. So it's at 93k. Until Bitcoin closes a daily candle above this level, it is in a daily downtrend because this high led to this lower low. So you need to get above there to start changing that structure, where again, that's when you start seeing some shows of strength, and that's when you look for some of your bottom patterns. So the question is, are we going to get more of a high time frame bottom on the daily like this, or is it going to be more on the 4 hour, as I showed you guys, maybe something a little lower time frame? That's the questions you want to see. The higher time frame and the longer price bottoms out for, the bigger the rally is going to be. Like if Bitcoin went sideways over here and actually reaccumulated, formed some sort of Wyckoff and went sideways for weeks, building a base. This is what actually then sets up a rally to potentially new all-time highs, because you built all this energy. Positions have been able to reaccumulate. If you get more of a daily reversal, then it looks more like this, and then more likely to just form some sort of lower high. And then if you get a 4-hour reversal on the weekly time frame, it will literally just look like this, a V reversal. So when you get V reversals, what happens here? When price just goes straight up, people FOMO into longs, they get 100x leverage long, they say everything's back on, and they completely 180 from being bearish over here. And that's why it then inherently tops out and forms some sort of lower high. So as a bull, like I always say, you actually want to see price get boring if it's going to be some form of high time frame bottoming formation. And who knows, maybe we are just going to keep forming higher lows on Bitcoin on the weekly. Yes, this has been a much deeper dip, but maybe that is what's going to happen. But price will show it first. Price will show the cause and effect, the reaccumulation on the weekly, or it won't show it and it will squeeze up violently, and that will be a sign that it's more likely to be a lower high. So that's why, yes, I give you guys many paths, but it's because price behavior is very important as to what you do. How price goes up determines whether it's a better short, i.e. short in the rejection, or whether it's a better long if you're actually seeing nice cause and effect and reaccumulation built. So got to wait and see. Especially today, it's a Monday, so typically it's good to let Monday's range play out, and then we can trade that Tuesday. But as I said, early signs are good. Flipping the 100-week EMA on the low time frames, offering good scalps. But let's see if that can now form some sort of 4-hour bottom or daily bottom on those higher time frames using these Deribit options levels at 80k, 85, and 90k as our guide. So if you guys watch Trade of the Week, you'll know these OPEX levels going to be very important for the trades I'm looking at, because if we go below 80 and then get back above, especially around ATM, that shows that it was inorganic selling and it was actually players just incentivized to push price below 80. So then when they're no longer incentivized after OPEX, is more likely to then squeeze up as they have to unwind those forced positions. And it's the same at 85k or 90k. It doesn't matter which one it is. The same concepts apply. If we see that inorganic pushing of price below one of these levels to put those puts in profit, and come ATM Friday, we then get above it, that shows that all of this positioning will have to unwind, and that creates a short squeeze. So that's what I'm looking at, either 90, 85, or 80 in terms of trade of the week. And that would set up your nicest bottom being formation, as well as it would be a lengthy period of going sideways. It would be a few days of sideways. So best thing you want to see is a boring Monday, boring Tuesday, boring Wednesday, but see what we get. 90k, get above there, then can have an exciting squeeze, but just know that squeezing vertically up is then more likely to fail. So that's morning markets GM. If you enjoyed this video, that quick update, drop a like, drop a comment, drop a subscribe, turn that bell on. I'll see you in morning markets tomorrow.